Good morning, and welcome to episode 65 of Getting Rich. I'm your host, Rich Checkan, president of Asset Strategies International, and today is Wednesday, February 23rd, 2022. Right now, all markets are fluid and volatile. Vladimir Putin went ahead and ordered his troops to enter into eastern breakaway, if you will, portions of Ukraine. As a result, the U.S. and Europe is going to hit back with some serious financial sanctions, and Germany has already stopped the Nord Stream 2 pipeline into Europe. Along with that, we have the interest rates here in the U.S. that are expected to rise at the March Federal Open Market Committee, FOMC meeting, if not sooner. However, the hawkish tone from the Federal Reserve is nowhere near hawkish enough to put a dent in the inflation that they're looking to fight that they created in the first place. Even if they go with 200 basis point increase in the interest rates, so 2% rise, you're not going to see any impact. It took 20% back in the 70s and 80s for Volcker to put a dent and put a halt to inflation, knowing full well at the time he was going to trigger a recession. So we don't see any kind of that resolve coming out of the most hawkish tone from the Federal Reserve. As a result, and even so, the markets here in the U.S. are selling off. They have been selling off, and the metals are continuing to shine. Let's take a look at some of the prices so far. I'm going to switch it up this year. So we've got gold up over $1,900 an ounce, silver in the mid $24 to $25 level. You got platinum at nearly $1,100 an ounce, and palladium at $25.06. I want to compare the indices here in the U.S. The Dow, so far this year, down 6.22%. The S&P 500, so far this year, down 8.76%. The NASDAQ, so far this year, down 13.40%. Let's look at the metals. I told you they're shining. So far this year, as of yesterday, gold up 4.1%, silver up 4.4%, platinum up 14%, palladium up 6.5%. Folks, the metals are doing their job. They got a lot of grief last year for being down, gold being down 3.5%, silver a little bit more when inflation was on the horizon. But they were in the middle of a consolidation phase. They are performing exactly as advertised right now, exactly as they have performed for millennia. Take advantage of this opportunity. They tend to sell off before the interest rate increase cycle. We've seen that. It is getting close. Once the first rate hike hits, we tend to see the metals move up in price. Now's the time, folks. If you're not taking advantage of this opportunity, I really do think you're missing the boat. The other thing I just want to caution you about, don't go all in. I think you still need to move with caution. We can still see Putin take a step backwards and the markets, meaning the metals, pull back a bit on the easing of tensions. So everything is very fragile, everything is very volatile right now, and everything is very fluid. But you do have an opportunity here in precious metals. It's been a prolonged one, and I suggest you take it. As always, I'd like you to go ahead and subscribe and like us on the YouTube channel. Send us any comments or questions so we can address them on the air. Happy to do that and share your opinions with others. In addition, go ahead and like us on our media channels and subscribe to our newsletter and alert service at Asset Strategies International. And don't ever forget that getting rich starts with keeping what's yours.